Hello, Bear Bull traders. This is Vicer. It's February 26, 2020. This is my trade review for today. I'll start off on the futures charts. These are 5-minute charts. NASDAQ here, E-mini S&P 500 here, Dow futures here. My time is set to Mountain Standard Time. And this was at the lows I want to point you to are from about 2:20 this morning. 4:20 Eastern Standard Time. The futures made lows and then went ahead and shot back up. NASDAQ went up about 200 points. And ES was up about 60 points. And the Dow at one point got up to be about 800 points in this move. So these are significant moves. And because these lows were made in the overnight session, my disposition for today was that to be short, and I'll go ahead and take you through my trade chats and my trades. So let's get started. So at 8:29 my time, this is when I thought we would start to reverse. Now I'm going to take you to the SPX chart, and that's the S&P 500 index futures. Index options, sorry. So I've highlighted that here for you. 8:29, this is when I posted in chat that I thought the market was going to start to reverse. So at this point in time, as you can see, I'm wrong. I hadn't made a trade yet. Then at 8:45, I said the low in the futures was set in the overnight session. We will retest that. It might not be today. So I posted that right here. As you can see at 8:45 Mountain Standard Time. That's right here. Still not short yet. At 8:50, right here, let me highlight this for you. Basically in this area right here is my next announcement in chat. NQ futures are 120 points above VWAP. So I'm going to go ahead and take you to that. That's at 8:50. I'll just toggle back here and go here. So 8:50 Mountain Standard Time. This is when I indicated in chat that the NASDAQ futures were 120 points above VWAP. So if we just take 8905 all the way up to about 9025, there's your 120 points. E-mini futures were extremely extended at the same time. Dow was extremely extended. The charts all look the same on these indexes today. So let's go back to the SPX now. And my next announcement was at 8:58. So let's go to that. Once again, Mountain Standard Time. So 8:58. That's right in here. I let everyone know that the Dow was up 800 points since 4 o'clock this morning Eastern Time. NASDAQ's up 200 points. This will pull back once again. When the futures make lows or highs in the overnight session, you should expect that the futures come back and retest those lows during the open of following day, or during normal business hours, 9 o'clock Eastern to 4:30 or 9:30 to 4:30, and or within the following business day. So I'm expecting futures to pull back significantly, which means the SPX will pull back as well. So made a few other announcements here. Futures are driving stocks, not the other way around. So unless you're trading a stock that has a catalyst, you should always be following the futures. I know some of you follow the SPY. That's fine. Follow the SPY, follow QQQ, follow the futures, follow the SPX and NDX. Doesn't matter. You need to follow an index so you can understand if the stock you're trading is highly correlated to futures, because if the chart pattern looks the same, it's correlated, and you need to be doing you need to be trading that stock the way the futures are trading, or the index. So at 10:08, significantly later, after the SPX is already pulling back, 50 points, 60 points here. Let's see, what did I say? At 10:08, that's right in this time frame. I'm letting chat know that SPX is going to go even lower. So at this point, you get about 17 points down to where I think the SPX will definitely test for today. And we'll go ahead and get into my trades. So that was like my last trade announcement in chat. This is when I actually got short right here. We'll show you that trade. I got short in this account. I'll show you that trade. And I took these trades just to record this video today. So what I did at 10:16 Mountain Standard Time was I bought a debit spread. I bought the 31.30 SPX put, sold the 31.20. Show you where I made that trade on the chart. Right here. Made this trade at the low, and then price started reversing. So there's my trade, 10:16 a.m. Oops. 10:16 a.m. Mountain Standard Time. 10:16 a.m. Mountain Standard Time. So I put this particular trade on one contract. So I want the market to continue to go down so I can close out this position for a profit. SPX reverses 20 points here. I'm not worried about this. I'm not stressed out about this at all. And I'm not going to close the position because the futures, if we go over to the futures once again, we're going to see that the futures haven't tested those lows yet. So let me scroll out here in time. We'll just go to the E-mini S&P 500. I'll go ahead and show you all of them. And there's the close. You're going to see price moving on these charts still because the futures are already trading again for the current overnight session. So it's the next day and the futures already. Okay, so at approximately 10:16, this is when I get short on this candle. And you can see this 5-minute chart, this nice reversal candle. If you look over here, NASDAQ reversed at the same time, Dow reversed at the same time, so they all reversed. But going back to the overall pattern is the low down here on the NASDAQ, on the S&P 500 was 3091, right? So I took this short at 10:16. So I took this short right here. So yeah, I shorted the low. However, I'm expecting the market to go lower. So I'm confident in this trade. And I've traded a lot of SPX index options in my trading career. So I didn't close the position out. I just held on to it. And I was looking to close the position around 3 p.m. Eastern, and I'll talk about why when I get into that. Well, let's go back and look at that trade. So I took a debit spread. So I bought the 31.30 SPX put here, 31.30 strike, and I sold the 31.20 strike. I just did one contract in this account, and I paid $3.65 debit for this trade. So the leverage factor, the multiplier factor, is 100 to 1 here. So the trade cost $365 to put this on per contract. And my goal was to take this off right around $7.50. However, wasn't able to take that trade off for that amount of money in the time frame that I was looking at. So I took it off for less. But let's go back to the trade again. So I'm looking to close this trade out before, let's get to it. I'm looking to close this trade out 1300 is 1 p.m. Mountain Standard Time. That's 3 p.m. Eastern Standard Time. I often look for a reversal in the futures and indexes between 1305 and 1313. So in that 8-minute window, I often look for a reversal. So I'm looking to take this trade off before a reversal happens. And as you can see, a reversal did happen, but that wasn't the close yet. So I ended up taking the trade off right here at like 12:59 Mountain Standard Time. I'll show you that. So here's the trade that I put on at 10:16 for a $3.65 debit. I took it off at 12:59 for $6.65. So I bought it for $3.65. I sold it for $6.65. That's a $300 profit per contract. Once again, I only traded one contract in this account, so that's a $300 profit in that trade. So the risk in this debit spread was max loss would be what you paid for it, $365. I sold it for $665, so I made $300 on this trade, almost doubled my money on that. Let's go back to the trade and just review that one more time. I sold a low. I sold an extreme low on the day, okay? But given the fact that, I was confident that price would go lower, right? And I've made this trade hundreds of times in my career trading SPX index options and following the futures and just watching the index volume and the open interest that carried over from the night before. We hadn't tested those lows yet on the futures, so I was still confident that there was room, right? Shorting here, yeah, we had a bounce up, who cares, right? Confident that the futures would come back down and retest these lows, get into this area. So that's why I held, and then that's why I covered right here. So I took a couple other trades in the SPX as well. I'll show you those trades. So at 12:09, I sold a put credit spread. I sold the 3070, bought the 3065, so I'll show you that. So at 12:09. So at 12:09, right here, I sold a put credit spread right here. So that means when you sell a put credit spread, that means you're long the market. And the options I'm trading expired today. So I sold I think it was the 30, let's check. Sold the 3070, bought the 3065. So I sold the 3070 right here. Sold this one and bought this one. That's a $5 wide credit spread. So your risk is $500 per contract minus the credits you received. In this particular case, I received a 30-cent credit, so it's a $30 credit. I immediately stopped out of that for a 5-cent, which would be a $5 loss in this case. I didn't like that trade, so that's why I took it off quickly. because I was expecting the market to go lower, and if I could sell a put credit spread again at a lower price, I would. In the interim, I ended up taking another trade at 12.27. I sold a call credit spread. So at 12.27, show you that on the chart. At 12.27 right here, this is when I sold a call credit spread. So this is when you sell a call credit spread, you're short the market. And the calls that I sold were sold the 31.50 call and bought the 31.55. So let's go to the options chain. So I sold the 31.50 call. This is the call that I sold. You can see the position still on here. It'll close out tonight when the options are purged out of the Thinkorswim database. And I bought the 31.55. So that is the call credit spread. I received a 95-cent credit for that. So that's $95 per contract. So once again, that's $95 for one contract. And I'd let that one expire worthless. I didn't, once again, because I was still bearish on the market. I was expecting the SPX to go lower for the day, and it did push up and move lower. We didn't drop down to those futures lows yet, but I expect that will happen tomorrow during normal trading hours. So those are my two trades for today. And kind of one of the key takeaways is this is one of my very small accounts. And so my max, risk that I had on these two trades was $365 in this one and $500 in the other one, this one right here. So that's like $500 or $865, max risk. And in this particular account, from these three trades, I netted $390. So with $865 in max risk, I netted $390 in profit today. As you can see that, I shorted the market at a low, but because, I was confident that the index would go lower. And once again, I've traded hundreds or thousands of index options in my career. I wasn't panicked, and I'm trading a small size in this account. And I did this specifically for the Bear Bull Trader team to show all of you, why I watch the futures and how to trade SPX index options. You could do this with NDX options as well. You could do it with, the diamonds, the Qs, the SPY, all of that. But there aren't a lot of traders in BBT who use debit spreads and credit spreads. So I wanted to showcase that for all of you and how to do this in a small account. All right, so hope all of you had a great day, and I'll see you tomorrow in chat. Thanks. Bye.